We're going to get rolling here this week, and I have to say, looking out the window here in Wisconsin, it's nice to see the sun out after the rainy weekend. I know as I visit with producers throughout the country, we're getting down to the end of harvesting here right now, so it sure be nice to see a good stretch of weather. What I want to highlight this week in here is, we have some really hot ag markets, and we have some not so hot ag markets, and I think it's important to take a step back and look at which markets really have some upside potential in here, and on the other hand, which ones would maybe a little bit weaker. The very first chart we're going to bring up in here right now, and I need to talk about corn every week. I mean, that's a must commodity, but this is the only chart I have on corn here this week, and this is the spread between corn and oats. And what I want to highlight here is this chart goes back more than 30 years, and you can see right now that corn is at more than a $1.50 discount to the oat market. Okay, that's an all-time high. The previous record, we went down to minus 50 cents. Okay, and it looks like that was around in 2012. But other than that, I mean, most of the time, corn has got a pretty good premium to the oat market. And even in 2021, it was up as much as a $3 premium. Okay, so partly corn market has been flat to lower here in 2021. It's the oat market that has been red hot with the drought in the northern plains and the Canadian prairie. As I look towards a monthly oat chart, and again, we got to go back a long ways to point out where some highs have been. You can see we're making new all-time highs, and oats getting above the $6 mark from 2012, trading above $7 for the first time ever here, in today's session. So the biggest question we get in here on oats is, okay, how high is high? And how would we figure out a potential upside target in the market? Well, this is kind of our best guess on where oats could run, and I just want to go through with you on how I look at things in this market. In 1988, we had a high on the oat market of $3.93 and a drought of 88. Then in 2008, we made that next high in the monthly chart was at $4.58. From 1988 to 2008 high, it gained 65 cents a bushel, or it was a 16% increase. Okay, when I look at the 2014 high at $6 a bushel, it beat the previous high by $1.42 and then more than a 30% rally. So if I use the 2014 highs compared to 2008 high and looking for this market to run up either $1.42 higher than the previous high or a 31% increase, that would project a high on oats between about $7.40 and $7.85, as you can see on here. I mean, today, oats traded to a high of $7.15. We're not saying an exact high is in. We're not saying that, hey, this is where the high is going to be for sure. But when you've gotten into some extreme markets and a major push up, it's not unreasonable to see a market go 30% past its previous all-time highs. I mean, maybe we peaked out here at $7.15, but you could easily argue $7.50, $7.75 on the oat market at some point. Now, what other hot markets do we have out there? The next one is spring wheat futures, and we've seen the spring wheat market rally today to the highest level since 2011. Okay, I have the red line on here, which is a 2012 high at $10.40 a bushel, and in 2011 it peaked out at $11.20. But the monthly high close in 2011 was 10.25. So when you look at this chart in here right now, you can put some resistance in the 10.25 to 10.50 range on wheat, and then up at 11.20. Today's high was 10.47. I'm not saying an exact high is in place in here, but we have gotten to some targeted levels. The other thing to keep in mind is when you look at the basis levels up to the northern plains, this rally in the wheat market right now is giving $10 cash wheat in a lot of locations. That probably is buying a few bushels and maybe could slow this market down or lead to a little bit of a pullback. The next market that's probably been strong in here is KC wheat. As you can see right now, we made new highs, pushed to the highest level in nearly 8 years. I mean, you really don't find resistance on this KC wheat chart up until about the 990 area, call it $10. I don't know if the fundamentals are quite bullish enough here, but when you look at what's gone on over in Minneapolis wheat and the oat market, that can sure make a bullish argument in here on KC wheat as well. Now, if I get over to some negative markets in here, and I don't want to be doom and gloom, we just got to face the facts. So one that sticks out to us is the hog market. Recently, we got hogs making new lows for the move, and when you look at front month futures in here right now, hogs are at their lowest level since February of this year. The other market that has weak fundamentals and has turned decidedly lower is the bean market. We hadn't traded below $12 on front month soybeans since December of 2020. We went down to 12 bucks, have gotten a little bit of bounce in here, but when you consider the rally in wheat and even the bounce in the corn market, this trade in beans is quite disappointing. The other weak market out there in relation to soybeans is soybean meal. We traded below 325 on meal. That was the first time since September of 2020 that we had front month meal below 325. Just a point of reference, in September of 2020, we had front month beans give or take around $10. So yes, we have some bullish markets. There are some bearish markets out there as well. We need to look at both sides. Here, I want to finish up today, on the bullish side of it, we really have oats. We've got Minneapolis wheat and that KC wheat. You could really add in here right now, whether if you want to look at canola in either Canada or rapeseed in Europe, or palm oil prices higher, that has supported the vegetable oil market as well. But here really on crops in the US, it's really oats, Minneapolis wheat, KC wheat are really the bullish markets out there. The bearish markets out here, I think, are soybeans and soybean meal. I should have put hogs on this list too right now as I went through that chart. That's one with some softer demand, and we're starting to see, stable supplies that way, a little bit of concern. Now, the markets that could get really hot here right now could be potentially oats and Minneapolis wheat. The biggest reason we say that is because we really view that they have inelastic demand, especially oats. What we mean by inelastic demand is that when prices rally, we really do not ration the demand at all in this market. For oats, oats is used for oatmeal and horse feed. You can make the argument also that spring wheat demand might be a little inelastic as well too. And keep this figure in mind. 1 bushel of wheat produces about 90 loaves of bread. Therefore, if wheat is at $9 a bushel, the actual wheat cost in each loaf of bread is only 10 cents a bushel. If wheat prices double and go to $18, the actual wheat price in each loaf of bread only jumps up to 20 cents per loaf. Just with rising labor costs and fuel costs, transportation, you've seen loaves of bread jump more than 10 cents a loaf in the store already. So I think that you got to almost call this Minneapolis wheat demand a little more inelastic because it's such a small price point when you look at it going and producing a loaf of bread. The last thing we want to end in with here today is momentum is going to move these markets much further than what you would expect. Okay, I mean, if it gets above 780 yen oats, this thing can run. Having said that, though, if beans break below $12, we could also break to 1050 as well too. We think the money's going to flow to the bullish markets, and there's not going to be much interest in the markets that have a little more bearish fundamentals, and that's where the momentum's going to really kick in. We're going to have a couple webinars in here this week. We had our normal one here on Tuesday. On Thursday, Patrick's going to go through on how a put option works and specifically wants to highlight our recommendations this past year of buying a November $13 bean put and our thought process on going through that for the year to help guys understand this better to make marketing decisions for 2022. If you have any questions, feel free to give us a call or drop us an email. We look forward to putting these things on every week. Have a great day.